Hi, I'm Mike Malacha with Pink Harbor CPA, and today we're going to talk about federal tax liens. So first, what is a federal tax lien? A federal tax lien is the government's filed legal claim against your property. And the reason why the government files a federal tax lien is because you owe the federal government taxes, some sort of tax debt. A lien is different than collection activity. A lien means that they're making a publicly aware document that anyone who would go and look to notify everyone that the government has a first legal claim to any of your assets that you have. So a collection activity is different. Collection activity is when the federal government actually goes to take money out of your bank account or to seize your assets to sell them to pay off your tax debt. Now, the IRS files a lien to notify everyone that they have first claim. Where this really comes up most importantly, how this impacts you is one, the credit bureaus become aware that you have a federal tax lien. So your credit score immediately begins to plummet. Secondly, you can't sell anything with a clear title. So if you go to try to sell your home, boat, car, something with a title, the federal government is enabled to get the proceeds that you have, leaving you with no proceeds or only the proceeds that are left over after the federal government's lien has been satisfied. The lien significantly prohibits your ability to get future credit. Most banks will not loan to you unless the federal debt is satisfied. The bank's attitude is, look, if you're not scared of the IRS and paying them back, then you're definitely not going to be scared of us and anything we can do to pay us back. So you instantaneously become this super high risk. Does it mean a bank won't loan to you? Doesn't mean that completely. A bank may loan you money. A bank, if you want to borrow $30,000 from a bank, the bank might say, well, you're going to have to borrow $60,000. The first $30,000 is going to have to go pay off this IRS tax debt. And a lien can also prohibit you from passing a background check. So for those of you that have a job or want to apply for a job where they do a background check and they do some credit monitoring too as well, the lien is going to show up. So it might prohibit you from getting that background check to get some type of title or surety insurance that you need in order to have a job. It might put you out of a job with banking. So how do we get a lien resolved? Well, the easiest way to get a lien resolved is to pay off the tax debt that we owe to the IRS. But most of us don't have that ability to go and pay it off right away. So other ways to get the lien resolved is to get the amount below an acceptable dollar amount that the IRS will say, if you pay us down below maybe $50,000, we'll remove the lien. You're still going to owe us the money, but we'll go and remove the lien that's on there. And another way to get it resolved is if you have a job that you will lose your job with this lien. While this lien is on, you are going to lose your job. That is another way to get a lien removed, where the government may, at their discretion, say, look, we don't want to put you out of work, because if we put you out of work, then we're never going to collect a penny. So we'll remove the lien as long as you provide us with sufficient evidence that you're going to lose your job or you have lost your job as a result of this lien. And that's a possibility, it's not a guarantee. So again, a lien is just the federal government making the public aware that they have a claim to all of your assets and that they get first right to all of your assets. There's ways to resolve it. There's the step one is really getting you in compliance and resolving your tax debt. There's things that we can work with. So I'm Mike Malacha with Pink Harbor CPA. Hope to hear from you.